Ladies and gentlemen, good day and welcome to the Kellton Tech Solution Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to thank you all for participating in the company's earnings call for the second quarter of the financial year 2026. Before we begin, I would now like to mention a short cautionary statement. Some of the statements made in today's con call may be forward-looking in nature, and such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management beliefs as well as assumptions made from the information currently available to the management. Audience are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's conference call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Now, I would like to introduce to the management participating with us in today's earnings call. We have with us Mr. Niranjan Chintan, Chairman and Whole-Time Director, Mr. Karanjit Singh, Chief Executive Officer, India, and Ms. Srinivas Portluri, Chief Executive Officer, US. Thank you, and over to you, Mr. Niranjan Chintan.
Thank you, Anushka. Ladies and gentlemen, apologies in advance. I have a severe cold and cough, so I may be coughing on the call, so please apologize for that. Okay, with that, I'm going to start off with thank you for joining our Q2 financial year 26 earnings call. For this financial year, we have achieved 300 crores in revenue, which is about 11.1% year-on-year growth, 37.8 crores of EBITDA, and a net profit of 24 crores. EBITDA margin is around 12.6, which is higher than last quarter. PAT margin is again 8.8%. EPS is 42 paisa. Despite the profit being high, the EPS is almost in line with what we had last quarter. The reason for that is the whole FCCB round 1 has been completely converted into equity. The number of equity shares went up, hence the EPS is like flat. Now for H1 FY26, we have 597 crores, 73 crores in EBITDA, and 46.8 crores in net profit. EBITDA margin stood at 12.3%, a PAT margin of 7.8%. The EPS is at 90 paisa. Okay, with that, I want to hand it off to Karanjit. Karanjit, can you talk about operational highlight as well as the customer wins this quarter?
Sure. Thank you, Niranjan, and hello, everyone. So let me first start off by speaking about the operational highlights, and then I will speak about the new client wins. So this quarter, we've had about 5-6 major highlights. So the first one, let me start off by talking about, we basically went live. We've implemented a next generation integration platform for a global food services company. And this was done across 10 countries and over 1,500 stores. So what this meant was they basically could decommission their legacy middleware and move to the more seamless and native scalable architecture. The other one, this was really something that was on the media. So we basically played a key role in powering a leading OTT platform in the live streaming of the recently concluded Asia Cup. So this was the first time that they were kind of scaling it up to this level. And this involved a lot of deep expertise in the area of cloud-native engineering, low latency streaming, and large-scale digital platform. The whole event went absolutely flawlessly, and this was thanks to all the readiness and the PSR that the teams had jointly done with the customer before the event. We were also recognized by a leading agri-tech enterprise for basically helping them with problem solving and technical excellence and exceptional collaboration during a critical production phase. They are a long-standing customer, and they were very appreciative of the kind of deep technical analysis and coordination that the team did during this critical phase for them. We also went live with a platform, a taxation platform that we were building. It's basically we're modernizing or completely building a new taxation platform for a Big Four consulting company. So this was basically something that they're trying to launch at scale, and also modular, something that they can also give in the hands of their customers eventually. So this involved it's almost like what we see in our taxation portals. So it's got all that complexity, has dynamic schedule creation, customizable summaries and all that. So this will eventually replace the old dated platform that we have. Some of you must have also noticed we basically signed a memorandum of understanding with a leading European technology company to help them develop a sovereign human-centric AI ecosystem under the EU-India Framework Agreement. So this is something that Europe is focusing on AI sovereignty for the Europe region, and they are basically trying to build a complete AI stack, including AI Gigafactory. And we are very happy as Kellton to basically collaborate and have a part to play with that particular thing. This, of course, will include everything from basically the AI Gigafactory build out to enhancing capacity for advanced AI, cloud and cyber security, which is where we would sort of, on the services side, is where we would help them. We also, the last one that I would like to highlight is that we partnered with a leading industrial solutions enterprise where we are helping them modernize the customer engagement and streamline the internal operation through a complete end-to-end digital transformation initiative. That will help them basically provide a seamless experience to both their customers as well as employees. So those were all basically the kind of significant operational highlights that we had. Let me also quickly move to the customer acquisitions in this quarter before I hand it off back to Niranjan. So Kellton, we've had 4 or 5 engagements that I'd like to highlight. The first one, we basically partnered with a leading global packaging solution provider to help expand its intelligent payment processing framework across the international entities. So we've already done, after having supported the US rollout successfully. Now we are moving it to the international area. So we've just started off with Netherlands. So basically, we are helping that and also optimize the whole SAP-based payment interface that they have, and also add a AI-assisted automation layer to the whole thing. We were also recently empaneled as a key technology partner by a leading global logistics provider, and we have initiated offshore IT support services, and also basically this will expand into basically helping them first of all define and then implement the AI-driven initiatives. The other one that we have basically won is basically a partnership with a leading US consumer finance company to reimagine, basically redo their operational efficiency through applied artificial intelligence. So we are basically working with them to integrate agentic AI frameworks and basically, automate risk modeling, portfolio evaluation, and decision workflows. So that's another client. We've also partnered with a leading engineering and industrial enterprise again to drive a large-scale digital transformation, to modernize their ERP system and transition to a unified SAP S/4HANA landscape. And the last one that is in the healthcare space, so we basically just about started a collaboration with a pioneering healthcare AI company to develop an agentic AI-powered risk adjustment solution that will basically autonomously manage complex payer workflows. So these were sort of some of the wins that we've had this quarter. So thank you. Niranjan, over to you.
Thank you, Karanjit. I think, a lot of people might have questions related to H1, the impact of H1 on Kellton. We have a little over 400 people in the U.S. Of them, about 40 are our H1s. And as everybody is aware, that the existing H1s have been grandfathered. It's only impacting the new H1s. And also, you must have been reading the news that because of this 100K, that new H1s would be required to pay. The company would require to pay. A lot of companies are outsourcing the work to India. So our impact has been, none at this point. We'll have to wait and watch what happens, next year. But as we've been hearing the news, the rules that have been framed are getting easier and easier. So basically, when initially what people thought to what it is now is completely different. So there is no impact at this point to Kellton's business. Okay, with that, Anushka, I want to open up for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants, you are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Jaimin Soni, an individual investor. Please proceed.
Thank you.
Good evening, Jaimin.
Good evening, sir. Thank you for giving me an opportunity.
Yeah, please.
My question is, I couldn't find any clarification from management for requirement of this huge fundraising till now.
So far, okay, let me clarify what that is for, right? See, when we initially, our company has so far been self-funded. This is the first time where we are taking money from outside entity. That is to be around one of $10 million that we're taking. Okay, that we're using for building our IP, because a lot of, research is going on in the AI world, a lot of dollars that we are spending. And also the second one is for working capital. The third is to increase our reach. Right now, Kellton's brand is known very well in India, but outside India it is not known. We're trying to spend money there. And the last one is we're looking at opportunistic buys of companies. So that is what the first round of FCCB that, we have sought the money, and now we are deploying that money. Now, coming to the new round of FCB, that is primarily, again, some part is going to be for working capital reasons. As we are growing in size, we would need working capital to go after contracts like LIC and HRMS2, where our payment cycles are stretched. For that reason, we are taking money for that. But the biggest chunk we are setting aside for acquisitions.
Sir, acquisition up to what time frame?
See, as soon as we get the money, right, we would like to deploy it within a year.
So our current market capitalization is 1,100 crore. Okay.
Okay.
And up till for $40 million, it sums to around 350 odd crores.
Okay.
And more of 250 crores of QIP. So
that's the
we have
next round.
Total amount of around 600 crores.
Right. Yes.
So what is the targeted company company's market capitalization?
See, I don't know what the market capitalization would be, but if you're looking at the revenue that we are targeting, we don't go after revenue. So we go after what we call the technology, where, we need to beef up our existing technology capability to go after. As you can imagine, every day AI is changing. What was good yesterday is not good today anymore. So when we start building something, 6 months down the road, we find out that whatever we built is not current to what the market is. So since the technology is evolving rapidly, we want to invest or acquire companies who are into this deep tech, who are into data-related companies that would get us the capability to go after additional customers. Mind you, existing customers are going to continue on. We are trying to go after new customers. So when we acquire either for capability or for customers is what we look at. Okay, those are the two targets. So to answer your question about QIP, at this point, right, the QIP round is probably a year or so away, whereas the FCCB round that we're doing is immediate, that we are doing at this point, and we would continue to look for targets. As we speak, we are actually looking around and seeing, what is out there. What can we look at that would make sense for us from the two reasons that I talked about, capability and or new customers that we can acquire.
So, what margin management is chasing for?
What margin?
So what margin profile, or let's say if company is going to acquire a new company, so what margin profile you are also chasing for?
See, the margin, again, these are new tech companies, right? In some cases that, there may not be any margin there. Okay, or minimal margin would be there. Okay, what our target is, if you look at it, 20% EBITDA is our target, is what we want to go after. But with the new deep tech kind of companies, right, the margin could be in the single digits. I'm talking about the EBITDA level, right? But what the capability that we bring to the table is, once we take on, we can get better EBITDA. So whatever single digit, we'll want to get it to the teens. Almost like 6 months to a year, we want to increase that to teens. So that is the target that we look at. So we are not looking for, okay, I want to get a 20% EBITDA number that I buy. I have to give EBITDA multiples. So I will be shelling out a lot more dollars for a 20% EBITDA company that has it versus, let's say, a single-digit number, and then improve the margins by our management taking out some of the overhead that is not required, use economies of scale that we bring to the table. So those are the way we operate, and we have successfully operated before.
Okay. Thank you.
Thank you. A reminder to the participants, in order to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Siddharth, an individual investor. Please proceed.
Good morning and very happy Diwali.
Thank you, Siddharth. Same to you.
Yes, sir. I have a question regarding the summary which you have told about the H1B crisis, H1B problem. So, most of the IT companies, including Kellton, also the revenue comes from the North American market, most of 80%, which I remember.
Correct, yes.
So this has exposed very much the risk of the market of the geopolitical uncertainty. So what have you planned for the forward future planning to diversify the market beyond the North American, like in Southeast Asia or Middle East or Europe?
Okay. So Europe has been our focus area, but as you are aware, Europe is pretty much in recession because of the Ukraine war. We have not grown to the extent that we wanted to grow. That has always been our focus area. to answer your question, yes, there is a geographic risk of, especially America. Let's not just talk about North America. But you probably must have noticed in the news, Canada is opening up. They're saying they want to welcome all H1s there into Canada. So that's a market that we already are present and we'll expand there. Okay, so those are the markets that we grow, and Asia Pacific is growing for us. We'll continue to grow. Middle East is growing for us. We continue to grow there. So those that we have, yes, huge concentration is still America. I don't believe that anything is going to happen with the American market, despite all the talk and speculations that are going there. Other than the recession that might come about in America, I don't believe anything else that the media or let's say the talking heads are talking.
Okay. Thank you.
Thank you, Siddharth.
Thank you. Participants, in order to ask a question, please press star and 1 on your touchtone telephone. Again, a reminder to the participants, in order to ask a question, please press star and 1 on your touchtone telephone.
Anushka, if there are no other calls, let's close it off.
Okay, sir. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Niranjan Chintam for closing comments. Over to you, sir.
Thank you. Ladies and gentlemen, thank you for joining the earnings call. So we'll look forward to talking to you soon in the next quarter's earnings call. Have a great day, and we'll see you soon. Talk to you. Bye-bye.
On behalf of Kellton Tech Solutions Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.